This is Business Edge right here on News Central. I'm Tolu Balogun. We do apologize for the late start. Let's get straight into it. Our headline story, Nigeria's petroleum dilemma. On March 11th, the Petroleum Products Pricing Regulatory Agency shared a new pricing template for petrol on its website. The new price was meant to be between 209 naira to 212 naira. This decision was met with fuel queues and anger. But later that same day, the template was removed from the PPPRA's website, and the Nigerian National Petroleum Corporation said there was no fuel price hike. So for now, fuel in Nigeria is pegged around 162 naira. But there are clear issues. Crude oil on the international market has risen. Landing costs in Nigeria are high as well. Will the price for consumers eventually rise? What happens next with petrol in Nigeria? This is our focus today. Welcome. This is Business Edge. And let's continue straight into our conversation. Now, the price of premium motor spirits in Nigeria, PMS or petrol, could have been about 212 naira 6 kobo per liter early this month after a new monthly template was briefly released by the Petroleum Products Pricing Regulatory Agency. The template showed that the retail price of petrol should sell between the market band of 209 naira 61 kobo and 212 naira 61 kobo. Long queues at various filling stations across the country, traffic jams, and an increase in the cost of transportation, as well as the immediate shutdown of some petrol stations were the result as Nigerians heard the news. However, following the furious reactions by Nigerians, the suggested price template was removed from the PPRA's official website. Also, the Minister of State for Petroleum Resources, Simipri Silva, the Nigerian National Petroleum Corporation, and other petroleum bodies have tried to manage the situation, insisting that the pump price remains unchanged. In the same vein, the NNPC's Group General Manager, Group Public Affairs Division, Dr. Kenny Obateru, denied any increase in the month of March. Likewise, Major Oil Marketers Association of Nigeria and the Independent Petroleum Marketers Association of Nigeria have both denied any hike in the pump price of petrol. Now, joining me on Business Edge is oil and gas analyst Seun Dania as we go into this issue and find out what exactly is behind Nigeria's current petrol dilemma. Seun, thank you so much for joining us. Welcome to the show. All right, so let's start with this very first question because there has been a clear, I guess we'd say, lines and steps that have been a precedent that had been set previously where the PPPRA would come out with a suggested template, a suggested band on their website, and it turns out that that would be what tends to be followed. But in this situation, we're hearing that they don't have the power to do that, or this needs to come from the NNPC. So particularly in this situation, what exactly is the PPPRA's power in determining the price of petrol as it's sold in Nigeria?
Thank you very much. The PPPRA is set up to regulate the price of petroleum products across the country. However, with PMS, we heard it has been deregulated. So normally the PPPRA shouldn't be
giving any
suggestions. You know, it's supposed to be driven by market forces. So whoever, but still, it's a sketchy method because as it is right now, the NNPC is still the sole importer of petroleum products into Nigeria, and then all the marketers buy from them. So yes, they still set the price sort of, but it's difficult to set prices because of there are different factors that come in. There's a landing cost, and each of these marketers need to pay to clear the cargo. They pay cost of logistics. So these things affect to the pump price. So normally, if everybody were to work well, the NNPC sets a particular price, PPPRA takes that price, adds all of these factors to make sure that the marketers are able to make some profit, and then they set a particular that it shouldn't go above this particular price. So usually there's like 50 kobo, 1 naira margin in difference. If you see at the NNPC petrol stations and then the general commercial ones, there's always a slight difference, but it doesn't. So yeah, PPPRA, as it is, they still have the right to set the prices because everyone is buying from the NNPC, and they need to control how the masses perceive it, so they need to be able to match that pump price, because otherwise, marketers are capitalists, so everybody wants to make maximum profit.
As much as possible. So there are a number of issues we raised, which is landing costs. We're going to get more into the NNPC part of this, but that's the first part I want us to go to. The NNPC is the only entity in Nigeria that is bringing in fuel into the country. We have independent marketers have said that the landing costs, as we know, petrol has increased to 180 naira per liter. But is it the NNPC bearing the cost of that increased landing cost, or is it them? Because the question remains, has Nigeria successfully deregulated? Is there still a subsidy for petrol in Nigeria?
So what it is the current landing costs at this point is about 151 naira per liter. But like I said, there are other factors, you know. So you get your cargo at 151. You need to pay it, you know, to clear it. You need to pay, you're
getting the cargo from the NNPC.
From the NNPC. Okay. So you need to pay. You pay for clearing. You pay for your logistics. You pay, your depot, wherever it is you're going to get it from. And of course, because of the toutism, you need to pay the community before you can actually load your trucks. Then, of course, now depending on where you are transporting the cargo to. So ideally, because a lot of people are getting from terminals around Lagos, cost of petroleum products should be cheaper. So the further up or the further out of Lagos you go, the more expensive it gets. So the NNPC tries to manage all of those things. So if you leave it to the marketers, of course, everyone wants to be centered around Lagos. Nobody wants to move product outside the country.
As long as the price is being controlled.
I mean, outside the state, as long as the price is being controlled. But if you give them the chance, the cost of petrol will be different in Lagos, it will be different in Kano, it will be different in...
It already is. Most times when I do travel out of Lagos, you see that is the situation. By a few extra naira here or there, generally is. So, Seun, I need a clear answer for this, and I think a lot of Nigerians also do. Is there still subsidy on fuel, on petrol right now in Nigeria, as far as you understand it? Yeah,
as far as I understand, the government is subsidizing. Anything that the government is fully involved in, they will subsidize. So they are subsidizing in terms of they are being the ones who are importing it. So that way the marketers don't need to source for dollars to buy these products from outside the country. So they are subsidizing on FX. They're also subsidizing on, all the security that goes on within the waters when you are bringing all your cargo in. So normally, if you were bringing cargo in by yourself, if there's a long queue before the vessels can berth, you have to pay for demurrage and whatever other security, insurance, any issues that happen while the cargo is being transported. But for the way the NNPC is doing it now, you are getting it at the terminal. So NNPC has subsidized the entire logistics chain all the way getting. So they are giving the marketers product on ground. So they expect you collect your product, you clear it, put it in your truck, in your tankers, and move it. So yes, they are subsidizing still because all those expenses are on the government.
On the government and then somehow on the people as well, because this is coming out of public
the government is directing it. It's putting it directly on the people.
So let's talk about this market forces, and it's something that a lot of Nigerians hear about when it comes to issues surrounding deregulation of the oil and gas downstream sector. So we hear about market forces that they will come into play, and when they come into play, competition will take effect, and then Nigerians would benefit. And a lot of people use the example of what happened in the telecoms industry. But with telecoms, there is not this fluctuation that crude oil on the international market experiences. So, Seun, if the market is actually deregulated and prices follow market trends, will Nigerians actually benefit in the long run? Because there are those who have said that Nigerians are not ready to pay the true cost of fuel.
Nigerians cannot benefit right now because the structure of Nigeria is kind of like skewed. It's designed to fail because normally we're supposed to be refining our products locally, and there are so many other byproducts that you get from. But if you refine locally, you get more value. That is the only time Nigerians can get any value from petroleum products. And the true cost for a producer is different from the true cost of an importer. Right now, we are paying the cost of importers. As the price of crude oil is going up, we are supposed to be celebrating as Nigerians because we're able to sell crude oil
at a higher price.
We get more money, and then locally we are supposed to be able to get more PMS, more value for even less. We're supposed to pay less for petroleum products, but we keep comparing ourselves with advanced countries who are probably only importing these petroleum products, and they want us to pay the same amount of these countries, the same amount with these countries who do not have as much petrol as we have. So Nigerians will not, until the structure of the petroleum industry is completely changed.
Okay, so on top of this issue of competition and the real price, in terms of what we see now with the markets of crude oil rising, landing costs rise, what is the actual true price in your estimation of what fuel should cost right now? Is it around that 212 that the now deleted template suggested?
So if you use the template or maybe from a refinery template, full cost of petrol shouldn't be more than 17 naira.
We're talking about without refineries.
Yeah, so if you are importing, yeah, it should be about maybe 180 to 200.
Okay, with a margin added for some
margin,
profit
and of
to
course,
it.
because of the value of the naira again against the dollar, that's what makes it go. That's what will make it reach that 200. But ideally, it will be about 185, 190 thereabouts.
All right, so let's look at this issue of crude oil prices on the international market and landing costs. Many Nigerians don't understand why a oil-producing country like Nigeria, one of the top oil producers across the world and the top oil producer on the continent, is having to pay so much for fuel. There are those who've talked about the winter months in the U.S., those who've talked about OPEC Plus and the decision to keep the barrels per day internationally at a set price, at a set level as it may be. But just for clarification, what is the correlation between international crude oil prices, landing costs, and what Nigerians pay at the pump?
Because we import, we sell all of our crude oil basically, and then we now import
at the beginning of the value chain.
Yeah. So then we now import refined products, which is the like the last part of it. So it's for us, we are not getting any benefits of the crude oil. So we are basically buying where the international market will determine how much we buy. So once we are buying that, we are now buying cargoes. We sell our crude oil as, let's say, maybe $70 a barrel. Then we are now buying the PMS, AGO at the international market rate. Then we now add the cost of transportation, cost of security, cost of everything to now land. So that landing cost is the government adding all those extras and then dividing it per liter of whatever it is in the cargo. Then they're able to come at a fair price, so to say.
Fair price. I don't know how many Nigerians will believe the price is fair from one of the world's largest crude oil producers. But we're going to take
It's fair in the sense that the government isn't making any profit from it.
Are we sure about that?
Yeah, so they just
hold that. We're going to take a quick time out right now. When we come back, government, are they making any profit from subsidizing fuel in Nigeria? And of course, Nigeria's refining capacity. You can't have this conversation if you don't talk about that. So we'll be back right after this. This is Business Edge, and let's get back into the conversation. Seun Dania is with me. Now, Seun, one of the issues when it comes to any conversation about fuel, petrol, PMS, crude oil in Nigeria is that Nigeria lacks refining capacity. But according to the Department of Petroleum Resources, 44 refinery licenses have been given to private investors over the past few years. Only a few projects, however, are underway. There are a total of 38 proposed modular refineries with capacity ranging from 5,000 barrels per day to about 30,000 barrels per day, and 6 conventional plants with a total capacity of 1.35 million barrels per day. Seun, how long do you think it's going to take before Nigerians start to feel the positive impacts of the modular refineries? Let's not even talk about the traditional ones, maintenance, turnaround, all of the fancy words we've heard over the years. But for these modular refineries that are coming in, and we've saw the president recently also inaugurate a very big one, how long do you think it's going to take for Nigerians to feel the positive effect?
It's going to take a very long. So of all the 44 licenses that were issued, I think only 2 are currently operational. That's the one for the Niger Delta Petroleum Resources and Walter Smith that was recently commissioned. However, the challenge that most people are having was funding. And I think there's also maybe a slight issue with the process of allocating these licenses. So a lot of them, if you take a look at the reports, a lot of them have issues around getting funding. So they already gotten the license, then they start to source for
funds to start up.
Some have the funds, but they are now unable to source for products, because so now they want to get crude oil from either the government and then to then refine. So if you look at the Dangote Refinery structure, the federal government will ensure there's crude supply to that refinery to make sure that the petroleum products are always available. But for a lot of the other people didn't have that kind of arrangement. They didn't have that kind of agreement. So it will. The environments around, these modular refineries are already benefiting. I can say categorically about the Ogbele community, River State, that's the Niger Delta Refinery one. They do, people around there are benefiting from it because it's easy to get there. They're able to buy product and then, sell. So it will be difficult to get any scarcity because their sister company, NDP, is exploring and producing. They have their crude oil and they are refining right there on ground. Same thing for Walter Smith. So people are able to benefit, but in terms of spreading out all the way to the whole of Nigeria, it will take a very long time because, like you said, the modular refineries, they are modular. They are very little, very little in their sizes. In terms of capacity, yeah.
All right. So earlier you mentioned the value chain, and that's one of the things that over the years, when you look at the industry, you see there's so many byproducts that can come from just that crude oil, and we are not engaged. Aside from bringing it out of the ground, we're not engaged along that value chain. We're not engaged in producing these byproducts for ourselves. How can we change that situation as well? Because we see that we can add value and then get more money, but we're not doing that. All of this, is this political will?
It's all political will. And it seems the question is how we can benefit from it. I believe that with these things, there's a lot that goes around funding, and we keep mixing it because our economists always compare Nigeria with the advanced countries. We're a developing nation, so I believe for nations to develop, our approach needs to be different. You need to give tax waivers to the companies who are willing to invest, who are look for hard dollars and invest in this country. You need to give them tax waivers. You need to be able to ensure that they are willing and able to make profit and pay back those, because if you took money in US dollars, $1 million, maybe 3, 4, 5 years ago, and you spent it in Nigeria, and then you're making your money in Naira, that is, you're selling petroleum products in Naira, it will be difficult for you to pay back because the Naira has lost a significant amount of value. But then it pays the person, if you invest that money in exploration and production, you will get your crude oil, and you sell your crude oil in bulk, and you get dollars for it. It makes more sense because that way you're able to offset your loans because you're making dollars. You're not willing to convert it into Naira and then start scampering for how you're going to. So a lot of people find it very difficult to break even. So they rather just sell the crude oil
and get in what they can. So very quickly, because I know time is not with us, you mentioned the Dangote Refinery, and there's obviously preferential treatment that refinery is getting. And many people believe that when the Dangote Refinery is fully operational, it means that the cost of petrol or PMS in Nigeria will go down. Seun, 1-2 sentences. Do you think that correlation, that line is direct to a reduced pump price for Nigeria?
No, it's not, because Dangote Refinery is a private company. So they will need to make profits. They need to set their own prices. Even though the government is giving them crude oil, they can, except if they have like a, let me say, crude servicing or crude refining agreement, whereby we give you this amount of crude oil, we'll pay you for refining it, and then you give us XYZ byproducts. And you have that volume clearly stated out so that the government knows that they are renting the facility and they are paying them for refining, and then they are getting back their product. So it's kind of like swap deal, which that's what the federal government used to do several years ago. They used to send out the crude oil, swap it for products. They had the actual, so they were not just buying off the market. So that way you're able to, that's how, several, maybe in the 90s, were able to maintain a particular price for imported products.
Okay, so I think a lot of eyes will continue to be on the Dangote Refinery. There's a lot of anticipation, but there also has to be a lot of clarity as to what Nigeria and Nigerians stand to gain on. Seun Dania, thank you so much for joining me on Business Edge.
I'm always glad to be here.
All right, let's wrap things up with NT4 to Watch, giving you a few ideas of the stories we're keeping our eyes on. And we start, where else? In Nigeria. The government has instructed telecommunications companies to stop the planned withdrawal of banks' unstructured supplementary service data, that's USSD services. Now, this comes after telecom operators decided to suspend USSD services over a 42 billion naira debt owed to banks with effect from today, Monday, March the 15th. Africa's economy should return to growth in aggregate across the continent in 2021 after a coronavirus recession, and this is according to the African Development Bank. And they said that there is still a warning that poverty and public debt would continue to rise. The 2.1% contraction of the Pan-African economy in 2020 was the first recession in half a century, but should give way to expansion of around 3.4% this year. The AFDB said in the 2021 edition of its African Economic Outlook report. The government of Morocco has ratified a draft law to legalize the medical use of cannabis, but it upheld the ban on its recreational use. Parliament, however, still needs to give its final approval to the legislation. The world's top producer of marijuana adds in the draft law that there would be the creation of a national agency to regulate the industry and for the establishment of cooperatives that would grow certified cannabis plants. And finally, Kenya has pulled out of the maritime border case with Somalia just a few hours to the scheduled hearing at the International Court of Justice in The Hague, Netherlands. The Kenyan legal team may seek 30 minutes to explain grounds upon which the country may seek not to participate in the hearings. On March the 9th, the ICJ, a principal judicial organ of the United Nations, stated it would hold public hearings in the case concerning maritime delimitation in the Indian Ocean from March the 15th to March the 24th. And that's this edition of Business Edge for you. Thank you so much for joining us. Don't forget to follow us on social media. We are at News Central TV. I'm Tolu at I'll see you next time.